I think you're going to enjoy this next session when we talk about assembling the optimal deal team. The discussion first looks at the benefits of bringing a diversity of perspective to the deal pursuit, whether that be technical expertise, unique industry or global experience, and gender diversity. But we also consider some of the challenges associated with having too many people involved. Those most obviously could involve leaks, but also the antitrust and regulatory requirements that are associated with the management and study of confidential deal documents. It's a very good conversation, which I'm sure you're going to enjoy. The spirit of this isn't to talk about failure in M&A, but rather to talk about what works. And certainly the opening welcome excites the imagination on M&A techniques and M&A methods, because all of us are chartered with doing better deals. And all of us ask questions about the method and the tactics we're using. Are they best in class? Is there something better we can do to lower the risk? Is there something better we can do to improve the returns and the outcomes of the deal? And this curiosity keeps us entertained throughout the year, and I hope it keeps you entertained as we talk about and think about these issues together. We've given some thought to this in advance, and we've got some questions we're going to talk about, and I hope we're going to come away with some clever and innovative perspective and information on what we could do in the future to put together, and in this case, better deal teams, teams that produce better deal results. And that's going to be the challenge for us to talk about, but I'd encourage each and every one of you to think about these questions with us and ask questions of these panelists and ask questions of yourself and the composition of the deal teams that you're putting in play. And hopefully we'll leave this summit and this conversation with some new ideas and hopefully some new friends as well. And we're going to stay for a glass of wine and conversation later. But first and foremost, let's start to talk about how you're going to get the right deal on the field. To do that, obviously we've got an interesting mix of speakers to offer comments and perspective. I'm going to go first, but real quick, introduce myself. So I'm William Jefferson Black, and I'm the publisher of the journal Transaction Advisors. So we study these issues throughout the year, and I'm pleased to bring this crew together. And I'm going to have each of them introduce themselves, and Hugh's going to tell you about his war stories as an investment banker and his new role in corporate development, and then we'll work our way down the line here. So will you introduce yourself and your background?
Sure. So Hugh Boston, hello. I work in corporate development, corporate finance, excuse me, at Interpublic Group. We're a marketing services firm. So if you've ever seen by way of example, the Geico commercials with the cavemen or the funny little green guy, we do that as a way of example. So it's a fun business.
Great.
Nichelle Maynard Elliott. I am presently a board member, independent director of a company called Element Solutions, publicly traded company, specialty chemicals.
Sarah Salomon. I work for a company called Mercer and focus on, yay, people nodding their heads. Good, that means you care about HR. So focus on M&A in the HR space.
Great. It's great to be here, William. Thank you. Alan Konevsky, I'm the Chief Legal Officer at T0. T0 is a financial technology company developing blockchain-based products for the capital markets. So we're hoping Wall Street in 5 years is going to look very different than what it looks like now. Before that, I had a variety of roles at a large company in the payment space, an investment bank, and then in a law firm in London and in New York. And across the entire journey, I think M&A and deals in various capacities has been a constant theme. So great to be here. Thank you.
So to kick off, just to real quickly set the stage for this discussion, we were inspired by some research that's in development at the Cass Business School in London's M&A Research Center. And this research talked about diversity in M&A teams, and in particular gender diversity. And it inspired us to start to talk more broadly about deal teams and, again, best practice. And to set the stage, what excited us about this question was whether there is ways to improve outcomes. And in this case, the research found two things: that the outcome in M&A transactions was better when a woman was involved, but it also said that the initial reaction in the financial markets was more negative when a woman was involved. And we sort of scratched our heads and said, well, that doesn't make a lot of sense, but let's understand that issue. But let's take a broader lens as we look at not just men and women, but a diversity of experience and expertise. A diversity of gender is certainly a part of that mix. A diversity of geographic knowledge and experience. This is a global deal marketplace, and so is everyone on your deal team from Michigan or Ohio, but you're doing a deal in Europe or Asia? And it started to excite us. But before we do that, let's just talk about sort of what's standard practice. And so, Hugh, I'm going to lean on you first. So describe, if you would, typical situation. A deal comes to your desk, and you're chartered with putting together a team to pursue this.
Sure.
What happens next? Who's on that team?
Sure. Well, first, geographic diversification. So I'm from Alabama, so I think that probably kicks in. My friend Chris there is too. So I think that probably kicks in some of that. But probably not too dissimilar than probably most people in the group here. I mean, we kind of think about it. If you wanted to bucket it, maybe in three buckets. We have really our core deal team. We have our in-house specialists, if you will, that are brought in, and then the third bucket being, external advisors and specialists. Probably, sounds pretty familiar. The core deal team is kept pretty small, and I should really back up and say, we're about $8 billion of revenue. We operate in about 150 countries, about 55,000 employees, and that's neither big nor large necessarily. The point is that we are spread out, right? And so we are very decentralized in our operations, but we did find through some trial and through some publicized error before we got there in the early 2000s, that our M&A function really needed to be centralized as much as possible. So our core deal team, emanates from that principle. And so the first group is the the corporate development lead, which is here in New York always, the global lead. We will then have a business unit lead of the sponsoring business unit, and then legal counsel. That'll be kind of the core team. And then in-house, we have, just like everybody else in the room, we have our tax people, our accounting people, our insurance people, our HR people, our IT people, our treasury people, et cetera, that we pull in the specialists. And then we have our external advisors. We have our diligence providers who help us. Rarely, because most of our deals are small tuck-ins, but every now and again we'll do something of scale or of consequence, and we might hire an investment bank perhaps to help us with that. But that's the basic structure of our deal team.
And so the initial team, are we talking about 3 people?
Yeah, probably about 3 or 4, maybe 4, I'd say, okay. Yeah.
What are the triggering events when you start to add more people to that team?
Well, I think process. It's really, it's really a small team that can get you to a term sheet. Okay. But then once you get to that term sheet, you need to obviously be pulling in the right people. Right. And again, like I feel like probably most people in the room, M&A has to be a very process-centric activity. Otherwise, it's unwieldy. And you have to advance things on multiple tracks at the same time. You can't do things linearly. Yeah. So, we're very conscious and very focused on that, as well as invariably something's not going to go quite right. And it's okay if that happens once, but it shouldn't happen again. So we have a lot of processes to incorporate all those things and to make sure that the right people are brought in at the right times.
Interesting. Yeah. And at that point, are you having external advisors look at deal documents as well in that early stage? You got 3 internals.
Sure.
External as well?
Yeah, absolutely. So, again, it depends on the jurisdiction. If it's, we're headquartered in New York, we have substantial operations over the world. Our key legal teams are in New York and in London. So basically, if it's, a Western market, if you will, broadly defined, that'll be handled by our in-house legal. But if we're in Indonesia or in South Africa or Brazil, then we will almost certainly hire local legal counsel. And the same thing with respect to diligence providers. If we have teams that can handle a lot of that in-house, so we like to do that both from an expense standpoint, but as well as if our team is handling all the diligence in-house, then they're already, by the time we close, they know that asset and some of the granular skeletons in the closet maybe a little bit better than otherwise. So especially when it comes to emerging markets, that's pretty important, as I'm sure a lot of people up here know.
Yeah. Well, and how does this reconcile with your experience in terms of the composition of the team at the onset? So Nichelle's had such an interesting career because she came out of the legal side and then into corporate development and now as a board member. Do you like this small, nimble team, or do you like to put everybody in play at the onset to bring in tax and HR and all of the other disciplines that Hugh mentioned?
Sure. My experience is very similar to Hugh's, actually, and I think most people in the M&A space believe that small and nimble to get to the finish line as quickly as possible is what your overall objective is, and I think that's also true from a board perspective. I do also agree that you bring in specialists at the appropriate time. I'm not sure how many specialists you have really matters to the board, because at the end of the day, at the board presentation, it's the business person who's got to own the deal and be able to speak to the risks that the board is concerned about, but it's just matters that you have all of your diligence taken care of and you've hired people when you need them. I think then in terms also of deal metrics, right? You're also looking at what the cost is, and we talked a little about this last night. It's, sort of you want the best metrics for your deal, so you don't want to have a lot of unnecessary external expense, but you want to be very pointed in the experts that you hire that will bring expertise that your internal team doesn't have.
Mm-hmm. Interesting. Now, Sarah, you're up next because no one said bring in the HR person.
I know.
But every M&A conference we host,
HR, it's right there on my list.
I hear this theme, which says if only we were brought in early, we would have been able to produce a better outcome. And this tension, I pick on you and draw on you because I know you've got such knowledge in this area, but this is true for the tax people. I know some of our friends from True Partners are here. They'll say, boy, if you brought us in early, we could have made some changes. We could have informed the structure. We could have done some planning. But
Everyone says that, by the way.
Everyone's special.
Bring us in early. All right, so Sarah, what's the best practice here about bringing in people to understand HR?
It in part depends on how your company is structured. So I work with some clients where they have somebody who is HR and sits technically in HR, but they sit on the M&A floor. Okay. Everything that they do is with M&A, and they are part from the beginning, but they know what I need to focus on, what I don't, what I should be digging in on, and they won't spin their wheels. I feel like sometimes part of the problem, whether it's HR or some of the other functions, is those people want to get into the weeds and solving for some little thing in Indonesia right away, that you're not ready for them to go that level, because you don't even know, you're still toe in the water. You're not fully sure that you're gonna move forward. And so if you can have people who kind of understand the deal process and know how to guide and when to speak up and when to say, we don't need to be a part of it, I think that's helpful. Yeah. The other thing that I'm also seeing some clients do is have the deal team learn from HR to say, what do I need to be looking out for? And if you can give me a cheat sheet of if it's works councils, if it's pensions, if it's a place where I'm not operating in, if their culture seems to be really different, then I know what to look out for, and I know when I might want to bring you in earlier than I would otherwise. Because, I'm a consultant, so I always say it depends, but it really does on what the specifics are of the deal. And so what I oftentimes with my corporate clients is trying to help the HR function inform corp dev so that they can build that better relationship and be brought in earlier, but only when they need to be.
Right. We for what it's worth, we do bring in, again, we're very process oriented, and so as soon as we have a term sheet, our process document says these are the people that need to be notified that there's a term sheet and that there's a deal coming, and HR is on that list. And we don't have someone who's dedicated. We don't have a HR person who does nothing but M&A. We do have H&R people who are point people for M&A, as well as divestitures. But divestitures, maybe I'll set this up a little bit, but if you're in corporate development, you're probably doing divestitures too. That's a very HR intensive process, right? Just logistically as much as anything else. So those people are brought in early in that regard, and then it's something they know that it's a little bit incumbent on them to kind of, okay, now I know about it, I'm going to make sure that I pick up the phone and I'm proactive and be helpful. Interesting. Let's pivot a little bit because let's talk about sell side real quick before we change. So Nichelle, you've worked on some divestitures, or Alan, have you worked on some divestitures too? Very different sensitivities around the composition of the deal team. Need to know basis, securing the information that a process is in play is very, very sensitive. And yet, again, the number of constituents that would be able to inform that would be great if it was big, but you run into all sorts of risks. And so again, do you think differently, or is it the same formula in terms of the deal team on the buy or the sell side?
Yeah.
Want me to go?
And then I'll jump in.
Sure. Look, I think you're absolutely right, and sell side is different. For one thing, it it sharpens the point very much that if you are the person who knows the most about the business that's being sold, odds are, if you succeed, you may not have a job. And so, look, people are people, and that's a very fundamental risk. And by the way, if you're senior management, that's almost guaranteed to be the case, unless you're being sold to a financial investor who, for whatever reason, wants to keep you around. And so it's very difficult that if you're carving out a business and you're selling it, or you're selling a standalone division, and the likely buyer is going to be somebody who's already active in that space, then people who you need to be in the process from the beginning. And keep in mind that we talk about M&A, but M&A is really a tool, right? It's an offshoot of a strategic deliberation process that has already happened. So a decision that you need to do something has already happened. And furthermore, a secondary decision of the way you do that something is by going external as opposed to using your internal resources or a partnership has already happened. And so, and it's with a divestiture to get to whatever, effectively the third node on the chain, where you're actually now talking about a transaction to sell something and who do you sell it to and how do you execute it. The people who should have been in the mix probably should have been in the mix already, right? At least the very senior people. So the problem of how you get them involved and how you keep them interested, how you deal with all the kind of the, the kind of the fears that they're going to have, very personal fears, very rational fears, and keep them interested and incentivized is important. And you got to solve that first, because if you don't have the leadership interested and incentivized to help you with the deal, all sorts of things are going to go wrong very quickly. Now, how broadly, these things tend to be the worst kept secrets in businesses usually, but you can at least make an effort. Big and bloated is not the solution, but if you get the management team sorted right and you allow them to make a judgment call in terms of who is essential and who isn't, you will probably get to a better outcome. There isn't a kind of an answer that you get out of the can on that.
Right. See, HR is coming back to HR.
I know, retention, number one issue we've found.
Absolutely.
Yeah, and so the management team, very valid point in how they're going to interact in the deal. In my prior life, I was in M&A at Praxair. So any of you who've been watching the industrial gases business, you would know that we just had a huge merger with Linde. So we spent the last 2.5 years in this process. And for us, confidentiality was critical. So it was a very small team from the very beginning, and we had all kinds of confidentiality agreements every time somebody brought in, because obviously you're dealing with regulatory authorities, and I was responsible for all of the divestitures across 70 countries, which was a huge project. And like you said, it's not the best kept secret, and you have a lot of tension and stress, and but it's also a very small core group of people are the only people who really know exactly what's happening until the absolute last minute, which can bring challenges, but the intent was to not do the deal by leaks, which it happens sometimes because we were merging with a company that had a very different perspective on how you engage the media in your transaction as you're negotiating.
Nice.
So.
Yeah. Look, I think the one thing that's worse than probably being thoughtless about how you put together a team for this, and it's not really a sell side issue, but I think this, in terms of putting together a team thoughtfully, although this side effect is more of a sell side issue, is if it's done in a way that's too secretive and too random, and you end up creating this, this culture of fear and paranoia and uncertainty from some of the people who you might very well need in order to sell this business to someone and realize value for your stockholders, but you may never know that, because the people either might be gone or be acting irrationally. And then you end up destroying value, and by the way, you may not sell the business, right? You got to keep that in mind, and you have to almost operate from the perspective of this may not get sold, so how should I be running this so I don't kill the business in the process?
Right, exactly.
And I think when it can be overly secretive, then there can be the issues of with RemainCo, right? Like you do the divestiture, or it's a big acquisition and no one knew about it, and now they're always looking over their shoulder, which is something that we see a lot with, like, okay, is our group next? Reading into like everything that anybody says, because now they're concerned, are we being sold? Are we buying, am I gonna have a job? And so that can be a problem as well. And I think it's very specific to the company and the company culture, but it's an important thing to keep in mind.
Yeah. And you mentioned confidentiality agreements and disclosures of and leaks of deals. Wouldn't someone have a confidentiality agreement upon their employment? Isn't that sufficient? Isn't that enough? You know, I'm baiting you that might not cover it.
Yeah, theoretically, everybody would have signed something when they joined, but this was so high-level confidential, and it was not just the people within the company, it was our bankers and everybody had signed on to agreements because we knew that the information was so sensitive.
Yes.
So it was as much a reminder to people, although you already have your general confidentiality, that you really have to be careful not to speak to this, even to,
Each other.
Exactly.
And was that given, so they were given a new agreement to sign at the onset of the deal, and was that to then to bring them into the deal team? They were brought into the data room, they were brought into the process.
As they became a part of the diligence process or part of the negotiation process, any of our experts, they all had to sign
Interesting to
confidentiality.
really remind them of their obligations and the sensitivity around that, because that's when it really mattered.
Right.
It's a really good suggestion.
Yeah, and I think one alternative to that is that you have a confidentiality memo, and that confidentiality memo has a list of people who are in the know, and that memo goes out and gets recirculated weekly. And if you want to talk to someone who is not on that memo, you got to go talk to the gatekeeper and have the person added if they need to be added. And so the reminder of confidentiality and all the bad things that'll happen to you and your family if you talk to, if you talk about stuff, and if insider trading is an issue, reminder of that as well. If there are any particular foreign and antitrust issues, reminder of that. And then having a list of people who are on the deal team and that you can talk to, and anyone else you can't. And if you want to add them, go talk to a gatekeeper and the person that may or may not be onboarded, or they may not be onboarded with full knowledge of exactly what's going on. So.
Yeah.
I'm working on a large divestiture right now with a client, and that's been a big issue. And those reminders on every document have been really helpful, because sometimes it's an inadvertent thing. So if you're in a very decentralized company and you need a piece of data, and you randomly ask, like, hey, can you get me X, Y, and Z, and it's something that you never would normally ask, that's been an issue and a trigger of like, okay, why are they asking for that? That's not something they would ever ask for in a normal course of business. And so those reminders are helpful, because you're trying, if you're selling it, and you probably know this on the buy side too, and you're trying to get information, and they're like, we can't get that for you because I can't access it myself, and I don't want to ask the HR person in Brazil for their pension data or whatever it is.
Yeah, it would be too unusual of a question to do that. So, is it similarly the new challenge around corruption? And partly not because people are more or less corrupt today, but because the enforcement is so much different today than it was 10 and 20 years ago, the foreign corrupt practices. But to be able to bring into the deal team forensic experts to look for fraud and misrepresentations is, again, sort of a new obligation that I imagine is not really easy to manage. Is that right?
So one of the things that we have done from a process standpoint that others might find helpful is that frequently the targets that you're looking at in, I'll pick a country that we did a deal recently, Turkey. They operate in a way that is very normal for them to operate and they have no problems with, but that violate Anti-Bribery Act in the UK, FCPA in the United States, as well as just different ways that they might hide things to keep from having to pay taxes. I mean, just and on it goes. What's interesting, though, is they will tell you right up front that they do all of those things. So you don't need to go and spend 6 months in diligence and pay, Mercer or whoever, pay PwC or whoever hundreds of thousands of dollars and spend all these months just to get a report back that says, guess what, they haven't paid any of their employees. We've actually prepared a very summary questionnaire that we will send to people in advance, and we will say, do you do these things? And a lot of times they'll come back and they'll say, Sure. We do them, right? Because from their perspective, it's not wrong. They're not trying to hide it. It's just that's the way they do business. And so we found armed with that saves us obviously a lot of time and a lot of gotchas and a lot of surprises.
Yeah, look, I mean, people who run 2 sets of books, right?
Right.
They'll run one set of books for purposes of paying payroll tax, which probably shows near zero. And then they run another set of books that's the real set of books, right? And everyone does it, and you got to deal with it.
Right.
And that's how the point. And so, I think it's not, I mean, yes, anti-bribery and anti-corruption is a topic, but, I don't think people now think it's any less acceptable than they did 10 years ago, right? I mean, yes, the enforcement climate changed. I think what's happening is that you have a lot of boards and a lot of companies that are chasing growth, and they're chasing growth in ways that are stretching the traditional business models and practices that they've been comfortable with, including geographically. And so you have people heading into new geographies, new business models, new sales and distribution models, and including by way of acquisition, that they haven't touched before. They may not be that sophisticated with. They might have run a nice domestic business, but now they're buying a factory or a distribution business in Russia and CIS and Turkey and Latin America and Africa. Okay, well, you know what? If you got to get out of that mindset. And so I think it's also pressure to just chase growth, and chase growth, it's not easy, right? You got to do stuff by definition that carries more risk. You got to do something you've never done before. You got to be a technology company that buys a supermarket. I mean, that's that's an easier example, right? Or you got to go into new geographies that carry a lot more risk. And if you haven't been attuned to that stuff historically, because you had no reason to be, your sales force was only in the continental United States. You continue to think that way, you're gonna have a problem.
Right.
But I do think that idea of a questionnaire up front is a great one from a process perspective, right? Because then it's just a matter of, well, now we're aware, so we can inform the board from the board's perspective, and then the board has a view on, okay, here's what you need to do to mitigate that risk, or legal
walk away.
Right,
yeah.
right.
Anyway.
Exactly,
Yeah.
right. Or, is there some sort of gray area here where we can get some kind of, reps and warranties or some kind of, mitigation for what has been done in the past that you will hopefully not do going forward.
Right.
But,
Yeah. Well, we started with this nimble couple of people on the deal team, and I quickly baited you to add HR and cyber people and anti-corruption experts, and so now we may have a whole bunch of cooks in the kitchen. But let's talk about the experience of these various voices. And Alan, you triggered my imagination around technology companies buying grocery stores, for example, that may not know anything about the grocery business. And I told Nichelle a quick story, which will hopefully set up this transition. So I listened to this podcast about Rent the Runway. And the person goes out to get funding for Rent the Runway, and she says to the VC says, let me take your idea home, and I'm going to ask my wife if she thinks Rent the Runway is a good idea. Comes back the next day and says, really bad idea, we're not going to fund your business. And she says, well, tell me about how much money you make. And she says, well, that's a presumptuous question, but the answer is this VC in Silicon Valley makes an enormous amount of money. And he says, your wife may be a woman, but she's not at all in our target market because she can buy gowns every day of the week and throw them away. And Rent the Runway, yes, it's for women, but it's not for people of that. So it was close, but it missed. And so this diligence team, which was assembled of the VC's wife, missed the mark. And so it intrigues me whether you're a technology company buying a grocery store or considering an investment in a fashion platform. If you have a deal team, they may have cyber or tax or HR expertise, but if they don't have knowledge of the target industry or market or buying propensity, is that a miss? Sounds like you might want to have that, but how in practice do you really field a team? Do you have people that buy programmatic ads or that do creative work? It's hard to put together a deal team that is in the buyer's shoes. But how do you think about these issues in a way, in a pragmatic basis, where you can bring expertise to bear.
Yeah, look, I think hopefully by the time you've done your strategy work, right, that concluded that you got to do something, and that something is go into, again, that particular retail segment, and you go into that particular retail segment by buying a supermarket and not starting a supermarket, you will have people who, in order to have concluded that, know enough about supermarkets to help you with some aspects of diligence and execution. The rest, I think you have to thoughtfully rent. And you thoughtfully rent expertise.
Yes.
Yeah.
I mean, do you want to hire a person just for that? Maybe. It sounds too clunky. You probably rent. Now, renting is not always optimal because you get, particularly if people you've never worked with before, which maybe by definition, in case you haven't, and advisors are hit or miss. But I don't think you have a choice. Here's the other problem, on the other hand. If you staff too many of your own technology company people on the supermarket deal, they are not going to be necessarily receptive to what you do with a supermarket. Or put it another way, when they get their hands on it and the deal closes and they got to integrate it, they're going to want to contort it, shape it, mold it, and turn it into a technology company. And not a supermarket, a different distribution channel, which is why you did the damn thing to begin with, right? And so you can't have too many of your own old school people either, because kind of a bit of a paradigm shift that you're making from a corporate and strategic perspective here has to flow through the team composition.
And I found from an HR front, part of it is just also making sure you're asking the questions of why you're doing things a different way. I have the opposite, where I work with a lot of clients that are older companies that are buying technology companies. And they're like, yeah, I know we need to put in a foosball table and have good coffee and scooters, and that's it. And they really would want, and it went really poorly. They missed the boat on benefits that, supposedly millennials don't even care about, but they do care about it. And it was a total miss, and they ended up having to basically let that company then, who had been fully integrated into their benefits, pull them out and set them up totally separate, because it created such a problem. And it was they thought about some of the aspects of what it means for a technology company to be in an older, more mature company, but they missed a lot. And part of it, I think, was they were moving quickly and didn't ask the question of why do you do it this way, and is there value in it or not? And some of it, it's not, or you make a calculated decision that we don't care, we still are going to have you do it this way. But I think those problems could have been solved earlier or been avoided if they had been asking the right question.
No, I think that's right. Look, I mean, cultural due diligence is a big chunk of it, right? As a director, what do you look? You look at strategy, finances, and operations, and culture, right? And you got to make sure that there's alignment or intentional misalignment, right? That that people are aware of. So intentional misalignment, right? You could be a big company and you could buy a startup because you decide to go online. Well, the reason why that startup is special is probably because they've been operating as 80 people with foosball tables and scooters and whatever else, and not because they're a cement company in Dayton, Ohio, right? And so if you really want them, you probably have to keep them the way they are. And if you immediately fold them into the family, and there's going to be, first of all, pressure to contort them and turn them into cement company employees. And second of all, you're just going to have, a massive impairment at some point. That's what's going to happen. And your strategy is not going to be delivered on.
Yeah. We're in the creative business, and so you can only imagine some of the groups that we buy and the cultures that they have. I remember when I first started, we were doing a deal in Brazil. So this ties both to creativity as well as Brazil, doing deals in Brazil, and there was some things we were working through on the diligence side, and the guy that we were buying his firm, he was well known down there, and he came back, of course this is in Portuguese, but it was translated because we were getting hung up on these petty details, and he said, "I feel the deal is no longer beautiful." And I cannot work when things are not beautiful. So, in terms of keeping the culture intact, we had to be mindful of that. But I think also when you talk about a technology firm buying a grocery store chain, I think, and the types of people who can help you with that, I think, there's another aspect of diligence, which is commercial diligence, right? And of course, this also ties very much, I love that it was talked about, this is really the strategy. It's like, okay, if we're going to be going down into an adjacency, hopefully it's not something completely different, but an adjacency, bringing in a commercial firm, a diligence firm, if you will, that are experts, consultants, what have you, to really help you, especially because the business unit may, in particular, that's sponsoring it, oh yeah, this is the perfect target for this, but is it really? You know, and so having that additional check, I think, is important.
Yeah, interesting. Yeah. Nichelle?
Keeps it beautiful.
The only thing that I thought of in that regard, you know, there's, you know, you're hiring commercial expertise externally, but to the point also about making sure you have the commercial person on the team from the very beginning, because they, at least in my world, the business people were the ones who did the integration, who carried the deal forward.
Right.
So, to know that they are the ones that have to execute on it and have to be able to, they've got to be able to speak into the process from early on.
Yeah, and hold them accountable for value leakage and for synergy execution, and that's really the key. So, well, I want to stir it up a little bit, again, drawing back to the research from CAS, but also want to start to lay some groundwork about involving some questions, so please start to give some thought to that. But before we do, I want to stir it up a little bit back to the initial inspiration, because we've talked about the benefits of speed and a nimble small team. We've talked about the benefits of bringing in experts later and strategically in the process. But let's talk about bringing in different perspectives, and I want to anchor against the research on gender diversity. And that looked at outcomes in terms of performance of shares post-announcement of the deal. But let's step back and first talk about, in the deal negotiation, the different experiences of having a room full of men and a room full of women. Let's just start at that point. And I think, Nichelle, maybe I can lean on your experience as having been an M&A person, a lawyer, inside, outside, now a board person. What have you observed in your career?
Yeah, and almost always the only woman in the room, if the only person of color in the room. So, but it's very interesting, and I think the research really tells us maybe what, with all due respect to my male colleagues, we don't necessarily want to admit to. I know that I have done deals, and I've been told that my presence in the room actually changes the demeanor of the negotiation, and without sort of going into a lot of stereotypes, I think that sometimes there's a more collaborative way of getting things done. That's not always the case if the room is full of men, and again, with all due respect, because not everybody negotiates the same way. But I think that's some of what happens when you bring a different voice into the room, a different perspective. We were talking about sports analogies earlier, and it's, you know, we're not necessarily, you know, how many, what are my stats on this deal, and so I have to, my win means your loss, versus we're trying to find a win-win. So I think just having a different perspective on how you approach a deal, and if I concede on a point, that doesn't mean that I'm weaker than you are. That kind of helps in getting to better deals and better kind of completion at the end of the game.
Yeah, this win-win concept is interesting, right? It's not a zero-sum game.
Right.
And I mean, if you've been in as an investment banker, as a corporate development officer, so many deal negotiations. I mean, hundreds probably, right?
Yeah. I mean, and so does everybody else. I don't want to overstate that, but I always think of one of my favorite phrases is, "None of us is as smart as all of us," right? And so I think that having a diverse team and being able to bounce ideas around, invariably you come out with a better idea and a better concept than when you walked in the room and began those discussions. So, diversity and inclusion is something that at my company, and I'm sure others too, is very, very fundamental and important. Our CEO is out front in our industry in that regard, and our company looks that way. Our deal teams look that way just because that's who's there. And we think that's critically important. We're trying to reach all consumers everywhere, and so it's important for our teams to reflect that. So absolutely, I think that gives a better outcome.
Well, and maybe this is a chance, I liked Alan's term because it was fresh, about rent expertise from the outside, but what that might mean is bring in someone from Sullivan Cromwell or some advisor from EY that brings some diversity of gender into the mix. But Alan, you've put together a lot of deal teams and negotiated a lot of tables. What's your experience been as far as gender diversity goes?
No, look, it's hugely important, right? And you said you walk into a room that's either full of men or full of women, right? I've never seen the latter.
Right.
It's a unicorn. It doesn't exist. Wish it did. It doesn't. right? It's, it's often the former, right? And there's going to be some exceptions. And that's true for gender, that's generally true for ethnicity. And, I think the recent trends have probably been towards positive improvements in that space. Is it enough? No. And you have to be, it goes back to the earlier point we made, you have to be conscious about how you put these teams together. And if your internal resources, William, to your point, are what they are, then what is entirely within your control and expectations is who you hire to do work for you, right? And the world is very big in that respect.
Right.
And no one has a monopoly on pretty much anything, right?
Right.
When I was very junior and starting out in the 90s, the managing partner of the London office of the law firm I was at said, cemeteries are full of irreplaceable people. I don't know if he was trying to motivate us this way or not, but it's true, right? There are a lot of lawyers out there. There are a lot of bankers. There are a lot of accountants. There are a lot of, some niche expert areas, I don't know, but generally there are a lot of people. And so if you focus on ensuring that at least through that way you can introduce the right diversity of experience, that's important. That's entirely within your control. And you find companies are doing better when it comes to the expectations for law firms, banks, accounting firms, and other consultants that they work with. And I think, and you're right. That's a pathway to do it, and that's a focus area. And has it been working well? No. Are people trying to do it? At least some of the larger forward-leaning companies? Yes, I think so.
And I think it's important that as we think about the diversity, that we then make sure that it's different types of diversity and different types of roles, because I am a woman and I'm doing HR, but oftentimes the only woman in the room will be the HR person. Right. And so just to always have oh, it's a people issue, so let me bring in the woman, but if it's a finance issue, not so much, has been an issue. So I think that's an important thing, that it's not just, bringing a diverse person, but it's what role, what level, and especially when you have really small core teams, is it only diverse when you get it really wide, and it's the junior people who may also not feel as comfortable to share their differences of opinions, because you just generally wouldn't with the more senior people anyway, can be an issue as well. So I think thinking about those aspects is helpful.
I was going to add to that as well, as you were saying it. It's not only having the person in the room, but respecting the voice. Yeah. Once the person is in the room, and giving that person an opportunity to speak, particularly at the levels that we function. If there's a woman or a person of color in the room, they're probably pretty well credentialed, because that's how they got there. So you would hope that they are bringing expertise that's going to be of value, right? And because I've been in rooms where it's been, sometimes it's a little more dismissive, and then I've been in rooms where that kind of opportunity and discussion is fostered, and that helps the deal.
Yeah, and I think that's right. And I think, look, you're absolutely right, and it goes to high value decision making and high value expertise. And it's not just because, we're buying something and the target consumer population is female, so let me go ask a woman what she thinks about shoes, right? That sort of stuff. And again, people do research on these topics, and that's all important. But I think ensuring that philosophy, which is very important, actually gets executed in a way that that brings those types of voices into decision making is important, and that's a journey.